Y'all couldn't keep the market up one more day? Holy mackerel. What a drop yesterday. We need to discuss the reasons why, the implications, and what about the bounce we're getting this morning? If you reported after the bell yesterday, uphill battle. But if you reported this morning, well, much easier environment. Jim Tassoni is going to join us a little bit earlier today. Christian Fromhertz taking the day off. GDP at 8:30. I'm back. It's pre-market prep.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Let's take it away. Your March 25 contract. That's right, March, quad witch tomorrow. Trading up 49 handles, just under 49 handles. You asked me for resistance? Don't ask me. Yesterday's high. That's in the 6,100 handle. The buck is flat here. That had a real good day yesterday, up over 107, getting near 108. TLT, when are we going to listen to the bond market? We'll discuss that with Triple D when he comes down on. Down 74 cents, 88.42. Crude making a move up, nearing a triple top, just over 74 bucks in the USO. 73.35. GLD up a buck 74, getting shellacked yesterday with the rest of the markets. Silver ETF flat 26.81. Bitcoin futures stayed above 100K, trying to make that support. Those futures are up $1,430 at 102,300. Let me remove my charts. Let's bring on Triple D. Dennis, how you doing?
Busy, tired. That was an exhausting night. That was one of my busiest after-hours sessions that I have had all year. Obviously, we know why, because Powell decided that inflation's creeping back and we're going to just hold off on all these rate cuts that we're talking about, hinting more at 2 next year, and the market expected a minimum of 3. That pulled the rug out from everything. Obviously, since you've been away, and I do blame you for this, Joel, because the market is always weak when you are away, so this is absolutely your fault. But that besides, all we can do is handle the repercussions. And the good thing is, Joel is back today, so of course the market rallied 50 points. This is the Joel Elconin bounce here this morning. He's back. He's in his chair. He's providing liquidity and buying stocks out there, and that is why we're rallying here this morning. But, so many stocks like the Dow down 9 days in a row going into yesterday, and then the 1,000-point sell-off. So the question is posed, is that capitulation? We have a lot of stocks that are full on, just look terrible on the charts. We have a lot of stocks still holding up this market. It's been the tale of 2 markets, but yesterday was the tale of 1 market, and then the 1 market was the Fed. The Fed, obviously Powell pulling the rug, TLT weak, US dollar blasting off into orbit because obviously, that's going to be good for, US dollar if rates stay higher for longer and the rest of the world is lowering. So, if you're looking at the Canadian dollar this morning, if you've been following it here, obviously I follow it because I'm in Canada, but for all our Canadian traders here, just bringing up where the Canadian dollar is, it is now $1.4368. We were like $1.35 in the summer, so a lot of weakness, obviously, when we're looking at it from that perspective. Under 70 cents if you want to look at it the other way. But U.S. dollar just blasting off. I don't know what to say here. This market is.
I'm gonna stop you.
Yeah, you should have lots to say because you've been away all week. I want you to talk for 10 minutes straight right now.
No. So let me put this in the right context, okay? And the context is that I'm not calling for a secular bear market, okay? But what I'm asking is if you've had a market that's been so predicated on lower interest rates or the aura of lower interest rates coming, now that the Fed has pulled the rug out, it has tipped over the lemonade. Okay, is this a point where you really have to sit back and say, what an amazing run we've had in the markets for years and years and years, predicated on lower interest rates. Now that that's out, we don't know if they're going back up. I'm not saying where inflation is totally, it is creeping up. But I mean, is this a point? I mean, what's the TLT telling us? I mean, is this a time
Problems.
where you have to look at your portfolio, you have to look at your investing mindset and say, A, we're not beating inflation, and B, we're not really beating unemployment here. We are at an important crossroads in the market, and I want to get your opinion of whether the pivot yesterday will have as much negative impact in the market as it did heading into 2023 when they said rates are going up, whether you like it or not.
I mean, you have to go back to the well and just start separating what stocks are affected by interest rates and what stocks don't care. You know which stock doesn't care. Everybody knows which stock doesn't care. The stock that's been up relentlessly for the last 2 years in a rising interest rate environment, even before we started following, and that is NVIDIA. NVIDIA don't care. They don't care about rates. So the NVIDIA sell-off yesterday has been quickly scooped up. NVIDIA going up. Again, valuation, and it has the head and shoulders. But I mean, you got to start separating. Are you interest rate sensitive stocks? So first exercise,
Okay.
again, I'm going to say it one more time. Take your stocks before you do any buy. The very first question you ask, don't look at a chart. Very first question you ask, is it interest rate sensitive or is it not? Because if it's interest rate sensitive, that's a problem. Look at the XBI, which is possibly the most interest rate sensitive ETF out there. Why? Because all these small biotechs need to borrow money to obviously finance their trials. So XBI absolutely crushed yesterday. XBI was down for multiple days going into it. XBI approaching a 6-month low here. It is linked at the hip with the TLT. So if we're back to watching rates, you have to watch the TLT. TLT links, there's stocks that go up with TLT going down. We know NVIDIA is one of those. But there's a lot of stocks that are going to go down. XBI, all those biotechs, think about the small ones, all massacred, and for good reason, because rates going higher is really bad for those companies. Not saying rates going higher, but rates higher for longer. And, now we're looking at it. We all anticipated, the market anticipated that the Fed was going to start getting more aggressive with the cuts. It's not happening, folks. He said it yesterday. There was people who didn't even want to cut the quarter. There was one person, the other, on the Fed, that didn't even want to cut. So, I mean, aggressive, this Fed is basically still being aggressive against inflation. They're still worried about it. They're probably seeing Trump talk tariffs too and say, hey, that's inflationary as well. So let's just keep some bullets in our chamber as opposed to being the rest of the world here and starting to cut rates all over the place. So again, the exercise, is your stock interest rate sensitive? If it is, it's probably a sell on the bounces. If it's not, if it's a tech stock like NVIDIA or, even some of your other ones, obviously all your tech stocks are sitting near the highs. They can still perform in this environment, but you got to be very careful with what you're buying.
I think also we'd be remiss if we didn't mention there were other factors, going on yesterday. I mean, I don't know how much you pay attention to the bird flu, or a much more important thing is how absolute chaos in Washington. I mean, here we are. We have a Republican House of the Speaker of the House. He brings a bill in for a funding to get us over to the new year, and no communication with the White House. It's absolutely shut down. So you have chaos in Washington. I'm not even going to comment on the bird flu thing. And then you have the aura of higher interest rates. So it just wasn't that. I mean, that really, that added momentum. I was traveling, so I was following things as not so much in real time. But I think that really had a big impact on the market as well. And we've seen this before. Are they gonna fund? Are they not gonna fund? But now what they want to do is they want to pass this bill, long-term more cuts, but they want to raise the debt ceiling limit. So I think that really added to the momentum of things. But we got to
mean,
bounce.
it was all the Fed. Let's be honest
Okay.
here. There's other things we can worry about, and maybe some of these other things is why the Dow has been down for 9 days in a row coming into this, now 10 days in a row. there's lots of, things to think about, but, we can speculate on, what's going to happen and, looking forward and stuff, but you just got to let, price dictate. And I mean, until you start seeing a TLT rally, and this is a great day for Jim Tassoni, who obviously called the TLT sell-off, but until you actually start to see the TLT start to blast off and people are like, yep, lower rates are coming here, it's hard to get bullish a lot of those value names that are so dependent on lower rates. So, I mean, I'm just going to keep bringing that up here because it's such an important point.
What else?
Earnings, we have an earnings.
Let's go to earnings. Whoo! Micron, I saw you tweeted out, Dennis. You decided to wiggle out of that Micron. Give us the numbers. We'll break down the technicals.
Yeah, well, so I sold my Micron. I've had it for the last 6 months. Took it through a couple of reports here. So cyclical. I talked about on pre-market prep yesterday saying, I don't know, I'm thinking about selling this ahead of the report because it's always so volatile going into the report. And then, obviously, I sold it in the morning. I actually sold it at 111, so I got near the high of the day. But then you get the Fed and you're like, man, you would not want to be long. So we always say, market sentiment. You did not want to report earnings last night. It didn't matter what you reported. They were probably going to sell any bounces because people were wasted, obviously, on the stocks. And, people just nervous. So the overall market was not going to bode well for either Micron or Lennar, which reported last night. Different story this morning because we've got a nice bounce. The stocks reporting this morning get the benefit of, sentiment's here. We're buying the dip again. So, overall market sentiment can drive. And again, Micron earnings were not fantastic by any means. So let's just give the report here because they weren't great. We'll go to Lennar in a second as well. But Micron reported $1.79 versus $1.76, which was a slight beat on the bottom line. But the sales missed. And then the EPS was not, the guidance was a little bit light here too. I'm trying to find it actually. Anyways, I don't have the guidance in front of me. I was looking for it, but I don't have it.
You know what? Let's just look at it. Wow, 111, and now you're trading here under $90. I got a zone for you here. It takes me a few days to get the technicals back. But I mean, you've had a ton of support at this 85 to 90 area going back to September. So you got to sit back for a couple days. So right now, buyers are actually stepping up ahead of that. But that's because like your 100 put buyers are like, I don't know what the expected move was, but there's a lot of people that are short term in the money from shorting this stock. They got it, was in their face early in the session tomorrow. So if you're a long term investor, you're looking at this technically very cyclical stock. Let's see if the bulls, I don't have a problem if you say, hey, I'm stepping out at 90 and I'm not even going to worry about 85. I'm going to go 90, 80. 80 is my stop. Let's see if I can get back up to 111. But right now, the pre-market low, that was on the initial spike. And that was close. 85.57. You're $6 off that. I think it's going to be tough. I think it might even be tough to get this thing under 90 today.
Huge support down there in that 85 to 86 area here. So would I reload it? I mean, I sold it yesterday at 111. Would I reload this in the 80s? Maybe. I kind of want to see. It's kind of like today is such an important day for the overall market because you get the massive sell-off. You almost predictably, this was one of the easiest predictions to say we're probably going to bounce this morning. One, because retail can't help themselves when they see these stocks all come down that much. And two, it's just what the market does. Dead cat bounce. The question is, does this bounce hold? If it holds, we can build on it. And again, I think certain stocks it might hold. I do like, the Nvidias and stuff. If you're thinking, higher rates for longer, those stocks probably work. Tech stocks probably work. There's a reason that tech's up, more than anything else here this morning. But, I'm skeptical, on other names. I'm skeptical even on the XBI. You can look this morning here and you can say, oh yeah, it's bouncing, but it's not bouncing much. It's only up 0.36%. Again, VKT or VRTX probably not helping it, which we can get to that in a second. But, there's a lot of names that actually aren't bouncing as much as, the overall market here. Tech, very hot this morning because, again, a lot of these tech names don't care about or it doesn't matter to them. Everybody wants lower rates, but it doesn't matter to NVIDIA nearly as much. So you sit here and you look and you analyze and you're like, do you buy Micron dip? I almost want to wait before buying dips here today. And again, we just rallied 50 handles from the lows. Is this really a dip here at this point in time? Or do you get a check back to yesterday's lows and then strike? I guess if you're sitting in a lot of cash, maybe you're using that, but I don't know. This is a tricky market to call
And you
because
know
that was
what?
a real
And you know what, Dennis? We have one heck of a person to bring on right now to talk about this, to talk about the bonds, to talk about interest rates, to talk about the longer term direction of the market. CF taking the day off today, but we got a special guest coming on right now. Jim Tassoni, CIO of Armor Wealth Strategies. Jim, help us, deliver us. We need you.
we do need you, Jim. We
We
do
need you,
need
Jim. So, Jim, this is such an important segment. I'm going to remove the charts, and I want you, in your calm, cool, and collected manner, put yesterday's sell-off in perspective.
Yeah, absolutely. And it's kind of it's funny, you know, when I saw the market sell off yesterday, and Joel, I knew you were out. I started looking for the tweet from Dennis to say this is all Joel's fault. And it didn't take more than an hour, and I saw that tweet and I started laughing.
You
But
knew it was coming.
yeah, I knew it was coming, and it's like clockwork. So I mean, I don't even need to make any comments anymore. I just need to know when Joel's next trip is, and
I know.
Accordingly.
Yeah, the Dow goes down. Joel leaves for 6 days. The Dow goes down, all of them, and then crashes. And then he comes back for 1 day, and we rally 50 handles here, Jim. We don't need any other indicators. We just need to know what Joel's travel schedule is all about.
That's all we need. Have a good day, everybody. But anyway, yeah, it was a really interesting day, right? Because I think there wasn't, to me, that much news that was totally unexpected. I think, you know, I heard a lot of people talking about even potentially a hawkish pause yesterday.
Yeah, I agree.
And we didn't even get that. So I think it may be a bit of an overreaction, but at the same time, and I think you guys both made a really good point here, is that we've had an unbelievable market the last 2 years. I mean, this thing has just been a freight train, and there's been no stopping it. So, you know, to see a 2, 3, 4% pullback in the market, I mean, I saw, like you mentioned, the Dow down 10, 11 days in a row, whatever, the longest losing streak since Gerald Ford was in office. And at the same time, I think even with all those losses, the Dow's like 5% off its all-time highs. So it's, you know, this is still very much a strong market. I don't think you want to go out and start yelling that the sky's falling. But like anything, I think you want to have your levels. I mean, in my shorter term swing trading stuff, I got nicked on a lot of things yesterday, hit my stop losses, but that's being a trader. I mean, we had been running for so long. I had profits in all these. Did I give a little bit back? Yeah. Did I get out and protect my profits on a lot of stocks? Yeah. But now we're at a level, and I think you're 100% right. The next couple days are really going to dictate things. Are we able to stabilize? Are we going to continue to chug higher? I mean, think about early August. Think about early September. We had those pullbacks. Everybody was saying, oh, bull market's over, panic. And then we just resumed the chug higher. So I think we need to be patient here. I think we need to have our levels, pick our spots, pick our stocks that we like, and just see how things unfold over the next couple days.
I think you make an excellent point. And, you know, being on the show with Dennis and, you know, going through the different market cycles, you know, we say a lot of things. We make a lot of predictions, and some are right and some are wrong. But I was always in the camp that, wow, do you really need to take rates down now? Do you need to take them down this fast? Is the economy that bad? And they did it. And then on the other hand, you know, well, they took them up appropriately, but then they started to take them down. And I was just looking for stability in rates. And that's why I don't think that there's really an all-out panic in the market, because I think that's what's going to come out. What's wrong with stability in rates? What's wrong with people that have fixed income or being able to get, you know, a little bit of return on? I mean, it's not like being in the market, but like if you're in some stocks like Nucor or the XBI, you'd probably be rather on 3 or 4%. My question to you, Jim, though, is, you know, is this, I mean, to me, it all comes down to earnings and fundamentals. I mean, is this really like what they're doing with interest rates? Is this really going to change what Apple does, what Nvidia does, what Microsoft does, what Google? I mean, what debt do they have? They have cash. I mean, I think it's going to take a lot more than a hawkish pause. Like when they said like a hawkish pause, I'm like, yeah, like what did you expect that they were going to lower? We've had higher inflation numbers. We're going to lower rates again, and then we're telling you you're going to take them down 3 or 4 times next year. I just think the investors were being greedy.
Yeah, and we have a lot of people out there. I think you're exactly right. It's almost like a lot of participants in the market have become almost like drug addicts, where it's like they fiend for these lower rates, whether they actually understand what it means or not to the overall markets and the stocks that they own. It's just like lower rates, lower rates. That's what we need. Just keep lowering rates, no matter the consequences or the underlying reasons why or why not. And I 100% agree with what Dennis said and what you're saying now, Joel. I mean, we continue to love tech. Some of our largest holdings in our, and I speak more to the large cap space on this show, but I mean, we still have a huge holding in Nvidia, even though we tried that unsuccessfully in my short-term portfolio. We tried that short. In my long-term portfolio, still long Nvidia. I've loved Google for years, and some of the announcements that they've made lately only furthers my bullishness on that stock. I think Google is a great long-term holding. I mean, these stocks are not, it's not going to matter whether, short-term rates or the 10-year is at 4 or 5 or 6 for these companies. They are rock solid. They've got huge growth potential over the next few years. I continue to like these stocks. Some of the more interest rate sensitive stocks, I mean, they're going to have their ups and downs, but that's what creates trading opportunities, right? And that's where I always say I like to have my levels. I like to know where I'm wrong before I get into a trade and adjust accordingly.
I mean, great points here, Jim. And again, certain stocks, even like a Google, maybe, rates don't matter as much to those stocks. So that's like what I was saying this morning is if we're going to have higher rates for longer, let's pick on the stocks that the rates don't matter as much to, because, there's so many interest rate sensitive names, Dow down 10 days in a row, all full of interest rate sensitive names. So, I mean, the luxury of being, a stock picker is being able to go wherever you want to go. And I mean, there's so many reasons to think that, hey, maybe stocks like Google and even Nvidia to this point, but Google, valuation isn't even stretched. I mean, it just sets up really well.
No, you're exactly right. And like you said, from a stock picker standpoint, I mean, this is the advantage, especially for somebody like me who plays both sides of the market. I mean, we're able to be long those stocks. One stock I've talked about on this show before that I've been short for a while. I felt like there was a lot of headwinds, whether it be interest rates, regulatory risk, and that's Ventas in the senior living space, VTR. And I've been short that for a while, and the thesis is definitely playing out. That's been a great short for us. You can play both sides of the market here. I'm a big fan of being able to have a stock pickers market. And I think that this type of a market lends itself to that, because I think there's going to be stocks that are hurt by this uncertainty, but there's also stocks that are unaffected, at least in the long term. I mean, yesterday, you get a sell day like that, everything's hit. And like I said, in my shorter term portfolio, I got nicked across the board. But longer term, you're spot on. There are definitely going to be spots on both the long and the short side to make money in this market.
Can we talk about some of those names, like where else you're looking here, Jim? Like maybe something you haven't struck on yet, either long or short side, because we do have a lot of traders in our chat that do play both sides. Obviously, I'm one of them as well. Yeah. Talk about setups on both sides here. Where are you looking now?
Yeah, so I mean, a couple of the stocks that I like, and I know I've mentioned some of them before, but we continue to like. I mean, we talk about Ventas on the short side. This is another, I guess I would call it interest rate sensitive stock, but we think that a lot of the bad news is priced in. It had a rough day yesterday, along with all of the interest rate sensitive stocks. But we really like Simon Property Group here, SPG. That's a name that we've kind of gone on the opposite side of the Ventas. This is one of the largest mall operators. They have some multifamily housing space in their portfolio, and this is a stock that we like. Now, the chart's been fairly decent. We've seen some consolidation. There was a gap down yesterday, but we love this area right here. We would look to be initiating along on this stock right here. We think SPG, maybe not for the next few days, but the next few months or several months, this is a great stock to own. We think that if you want to have diversification in your portfolio and have a stock in this space, we think this is the best of breed to own right now. And I know it's a bit of a contrarian play, but we think that's a great stock in this space. If you want to look at retailers, and I know I've mentioned this one before, but another one we like on the long side is Deckers. And this stock has had a huge run. So I don't know necessarily that I would be advocating to go with a large position right here. But this is a stock that we've liked for months and really since the beginning of the year. It's had a huge run. We continue to think this is a retailer that's reinventing itself. And along with kind of that Abercrombie and Fitch model and some of these other stocks that really have, we think, stabilized and sort of carved out a niche for themselves, we like this stock as well.
All right, we do have some data coming up here at 8:30. I just want to talk to you about, we got the Fed speak yesterday, or the interest rate decision. GDP, I mean, that's really not something, right, that we're focusing on unless we get a real bad number. But we do have PCE tomorrow. We do have a quad wage tomorrow, which are very important turning points in the market. I mean, and overall, I mean, yeah, the inflation's ticked up a little bit. Everything's been pretty moderate. Talk about the upcoming, data that we have coming, and also the quad witch, and just your experiences trading the quad witches and the important turning points it's had in the market over the last several years.
Yeah, I mean, I think from that standpoint, especially in the short term, I mean, we're only talking additional potential volatility, right? So it's a situation again where I'm going to let the market. I'm not going to try to predict what's going to happen or what I think is going to happen heading into some of those events where we may see an increase in volatility. For me, it's a situation where I want to have levels, and whether it's individual stocks or the indexes, I'm looking at levels. And right now, to be honest, we had a situation yesterday where we knifed through a lot of my short-term support levels. So I'm kind of sitting on the sideline here, and I know that's a really boring thing to say on a show, but I also think it's an important thing for traders to understand is you don't always have to be involved in every stock, in every trade. If you're not in a feel for the market, if you've had your levels breached and you're looking for new levels, I'm not a big advocate of always having to be involved. There's always things to do, but also there's times to kind of sit back, reassess, and let the market sort of dictate where your next move's going to be. And that's sort of where I stand right now. I'm not actively, like I said, in my short-term portfolios, I'm out of all the indexes right now, my Qs, my SPYs, and my IWM trade. And I'm just sort of looking for how the market responds today, where we find support, where we might potentially see resistance coming up. And I want to look to see how the market responds today before I really try to dive in.
Okay. Yeah. I mean, if you were trying to buy yesterday's low, like I said, I wasn't around. I didn't see that price action, but that, like, right now, you're 80 handles off the low from yesterday.
Yeah.
80 handles, and then when I was putting in the levels, I put the high of the day in. I put it at 60.48. No, 61.48 it was the high from yesterday. So very hard to find resistance. I picked an intermediate number. What I'll be looking at, to confirm that bottom that we hit yesterday is like to see us get back up to the 60-50 area. That'd be taking back half of that move. All right, we're gonna have some data coming across the board
Here
here.
now.
Triple D. I hope you went wide there a little bit. Not as big a number as some of the inflation numbers. Pre-market high 92.75. We're just bouncing around here at those levels. As I said, not much as far as resistance. Did have 98 and a quarter would be just 1 point, but that's just a very, very soft number here. Bulls, I think if you do get a pullback off this number, there's a lot of people that didn't cover their short last night. They might be thinking, oh man, I should have been out there. But here we are trading up 49 handles. Our final read for Q3 GDP. We also have jobless claims and the Philly Fed manufacturing coming across the tape right now. And from what I'm seeing, the market really doesn't care.
No, market doesn't care on any of these numbers right now. It's all about, and again, the initial jobs claims 222,000 versus 230, so a little bit light there. But I think this market is now just, it's tough. You get this huge move down, you get the bounce up, as a GDP or initial jobless claims really going to move the needle here? Probably not. But when we reopen, I can guarantee you there's going to be some movement here. When you get this institutional money coming in at 9:30 and jockeying around, there's going to be some movement here. The biggest question to Jim's point is, like, I'm kind of sitting back, with some popcorn here too. From a longer term perspective, I'll still do the day trades and stuff. But, from the swing trade long term perspective, I got to see if this bounce holds today. I mean, it's critical, that this bounce holds, because if it gives it back, then this 1 day whoosh could turn into something bigger here. And I mean, it's not a 1 day whoosh just for the stocks. It's a 10-day whoosh down in the Dow. So we got to give a perspective here too. There are certain stocks that are in bear markets here right now and still remains a stock picker's market. Jim, one more question before we go here. I just want to get your thoughts on the TLT. Obviously, you had a really good call coming down, from 100. You put on a short. Have you covered that short now? It's at $88. And what are your thoughts here on the TLT going forward?
Dennis, you want to rub a little salt in the wound on this trade, right? Although I will say it was a great trade. We made a nice call here, but yes, when we had this pullback in rates and the bounce in the TLT, we covered the last piece at 92.78. We didn't initiate a long at that point, but we're not short anymore. I wish we were. My longer term call for 465 on the 10-year seems like it might come sooner rather than later, now that we're up over 450, I think close to 455 on the 10-year. We said when we made this original call that we'd get to 465. We probably wussied out a little bit and covered faster than we should have. We're out of the trade now, but we still see at least 465 on the 10-year is kind of where we peg as where we think this could go.
All right, we're on the line with Jim Tassoni. He's the CEO of Armor Wealth Strategies. He's going to stay with us a few more minutes here on this. On this session. But Jim, I want to talk one particular sector, and I really, from what I read, I haven't seen. We're leaking a little bit here, Dennis. So we might not be careful here. We're high of the day may be in. Being a little premature here.
What's the high of the day? Bring up the SPY. I want to hear the high of the day. Joel Elconin call here. Where are we looking here?
The high of the day in the 24-hour
We just
market.
made it.
591.60.
So you're looking at the SPY for me. 591.60.
Yep.
I like when you talk SPY to me. I hate talking.
I will.
I love when you talk
I'll spy you. But one sector that's very important to the overall market is the housing sector, right? Very interest rate dependent. From what I saw, Powell did make some specific comments about that, the way the interest rates have gone up has hurt the housing market. The numbers on Lennar were not that bad, right? Yeah, they were that bad.
Yeah, they weren't great.
Yeah, 403 versus 412. Thinking about the old spinoff of the land unit here. I mean, are Lennar on your radar? DHI on you? I mean, I know we're going to look a little bit longer than just today, but I mean, look at the sell-off in these stocks here. Is it too early to start looking at these on the downside with that, with what we found out from the Fed yesterday? Jim, talk to us about the housing sector.
Yeah, no, our as far as Lennar goes, we liked housing for a while, but we turned and I have no position in this stock, full transparency, but our charts and our models and our indicators turned bearish on Lennar back in late October. So that's when we were saying, okay, it's starting to break down. The momentum is definitely to the downside. And that was when the stock was trading around 176, 177. So again, I wish I could own everything or short everything. Sometimes we have to make our choices. But that definitely looking at my own indicators internally, we showed bearish setups going back to end of October, around October 25th was the first time we flashed a negative signal on Lennar. And it's similar if you look at the larger ETFs like the ITB or anything like that. It follows suit along that. So we think that right now, we think these are all in sort of a bearish momentum. We're seeing momentum to the downside. We're seeing bearish setups. We're probably, I mean, again, depending on your time frame, we may be a little bit past the best entry points. But I also think that, to your point, if all of a sudden we're going from what was anticipated to be 4 cuts next year, which I thought was just asinine, pardon my French, but I thought that was ridiculous, to now to 2. And I was watching the Fed funds futures, and I think even the second rate cut for next year is sort of in question at this point. So we may be looking, like you said, Joel, at 1 or maybe no cuts next year in a more stable rate environment, which I don't necessarily know that these home builders in some of these types of stocks have priced in yet. So it's not an area that I would be looking to get long. I think you can look for short setups on pops, and that's probably how I would be playing this at this point.
I mean, put the TLT, just to add my thoughts here, put the TLT up there and put Lennar up there, or put DHI, put KB Homes. I mean, there's certain stocks that we say the XBI is interest rate sensitive. Home builders are absolutely interest rate sensitive here as well. So, I mean, valuation's attractive, sure, but we know if interest rates stay higher for longer, it is not great for these stocks. Again, though, we're still in an environment where they're not raising interest rates, so we have to consider that as well. They could, and again, depending on inflation data, the Fed course of action could change. So, at a certain point in time, probably valuation becomes attractive on these names, but these names have been on really ridiculous runs too. I mean, Lennar's up from, when rates, started to, they stopped lowering or stopped raising rates, middle of 2023, we're up substantially here too. So it's hard to just come in here and say, yeah, home builders, I'm just buying the dip randomly. I still think you got to have certain stocks grouped in interest rate sensitive, certain stocks grouped in non-interest rate sensitive. And if rates are staying higher for longer and TLT is going to stay depressed, I'm going to stay away from these names. Use TLT as your indicator.
Great point.
Jim, what, you talk about I know you take shorts. I mean, you talked about the Lennar, you talked about the indicators turning, and you can't have everything all the time. What and talking with the Moderna or the TLT, there's one thing to stay out of a long. There's one thing to say, I'm looking for an entry a long time, but there's another thing that says I'm getting short this puppy. Is it just like the diversification? Is it the asset allocation? What pushes you from I'm not being long this thing, I'm looking for lower prices, and I'm shorting this puppy?
Yeah, I mean, for me, when I short much more on technical reasons than I do for fundamentals. If the fundamentals match up where I have a bearish fundamental thesis on the stock, that's great. But I learned a long time ago when I first started shorting that shorting because you think something's fundamentally wrong with the company or you don't like their long-term outlook is an absolute recipe for disaster on the short side. You have to be more technical on the short side. You have to have stops. You have to have levels. And so what we look for more on the short side is we do have, we have our own indicators in-house that look at decreasing fundamentals, whether it be profitability, things like that. And that sort of puts the stocks on our watch list, both on a long and a short side. But then what we look for is confirmation from the technicals. And we like to short momentum. That's just how we like to do it. So my favorite setup on the short side is a stock that's had really strong upward momentum, but it's negative fundamentally for us. And then we see that reverse. We see it break a support level. We see momentum turn from bullish to bearish. And that's where we want to lean into a short. We don't try to pick tops in shorts because that's where we feel like we can get run over. We'd rather miss the top and short on the way down. And that's what we did with Moderna. We definitely didn't get the top on that thing. We didn't short the top. We thought the fundamentals were deteriorating. We thought there was a good bearish fundamental thesis. And then we waited for some breakdown and some momentum to the downside. So really we want to see a stock that's maybe had some bullish momentum that's now reversing, coupled with deteriorating fundamentals. That's the fat pitch down the middle on the short side.
Okay, I just want to stop and just reiterate this point because he's making a fantastic point. What I've said on this show multiple times is if you're positioning shorting, the best trades are shoot them in the back. We say shoot them in the back. Basically, when they're down and out, that's when you kick them. So many people, and I mean everyone, does this wrong. They're like, Tesla, I'm just shorting this thing because the valuation doesn't make any sense. And they're shorting when it's going straight up, making new all-time highs. That is the worst trading can do. Those people don't last trading. I'll tell you right now, those people get lucky every once in a while, but they do not last. Those people blow out their accounts. What you need to do is, and again, I have shorted stocks my whole life, a long, short, trading market neutral, but you always look to what Jim's point is. You wait for the charts to start breaking down. You wait for momentum to slow. Because when you got these ridiculously hot stories that aren't driven by fundamentals, just driven by story, then all of a sudden you shake the momentum traders out, and we always talk about this gap, the value gap versus the momentum gap. When you get the Momo traders don't care. Story's hot, hot, hot. Value investors still staying down here because there's no value. Hot, 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 hot. Starts going down, momentum traders, I need to get out. There's nobody to sell to because the value guys are way down here and it's more Momo traders. So that's when you get this cascading boom and these mini crashes and the rug pulls. That's where you strike, is when you start seeing the weakness happen. Don't short into strength. Actually, you get a bang spike, you get a bounce up. That's where you're looking more. So, shoot them in the back is the best way when you're shorting stocks. Kick them when they're down, whatever you want to say. That's, the way I trade them too. If I'm swinging shorts, not just doing arbitrage, that's the way I would be playing it.
All right, Eric Fabian, just kick them when they're up, kick them when they're down. What song is that from? Is that from the top?
When they're down, I know the song, but I don't know the name of it. Sorry, can't get you on that.
Is that the Talking Heads?
Do not know. Me and Jim are young guys. Joel's old.
You stumped the chump here.
Yeah. Okay. All right. So what we're gonna do?
Dirty Laundry.
Is that it? Oh, Glenn Fry. Yeah. Beach Club Trading. Yep. Yeah. Oh no, Bryan Adams.
Not Bryan Adams. Definitely not Bryan Adams.
The Eagles. There we go.
Eagles Dirty Laundry. Okay. That's what it is.
I'm going to remove the charts again, and I'm going to have Jim put on his money manager, long-term investing hat, and he's going to have a client call at 9 o'clock, and they're going to say, Jim, man, the market really spooked me yesterday. We've had such a great year. What do you think about, seasonality? And then let's say this person is old like me, okay? And they've been in the market for like a long time. And they're like, or they want to get super aggressive on the buy side here. Talk about the seasonality, talk about the quad witch, and then maybe a little peek into 2025.
Yeah, I think it's a situation where, again, if I'm putting on my long-term investor hat, I mean, what we usually try to help clients with is, look, we're investing for this. Your equity portfolio is for long-term inflation-adjusted growth. This is how we outpace inflation. This is
Yes.
how we build a portfolio that will sustain beyond just keeping pace. And so most of our clients are, I won't say smart enough because that sounds degrading, but they have money set aside that they're living on, that for the next, if it's 1, 2, 3 years, especially now where they can put that money in something and earn 5%, 4 or 5%. And then they can say, okay, look, I don't need to worry about every little wiggle and jiggle in the market. Jim's going to buy when he needs to buy. He's going to move me when he needs to move me, and I'm pretty comfortable. Now, with that being said, what I would advise someone, if they weren't a client, to do is exactly that. I'm a big proponent of diversification, not just in your stock investments, but in your income streams too. So, I count, my dad's in his mid 70s now, and he loves to ask me these questions all the time. He's a fairly aggressive investor for being in his mid 70s, and he's got a lot of his money in the market. But I finally told him, I said, Dad, any money you need that you need to live on in the next 2 to 3 years should not be in the stock market, because there is no way for us to predict what the market is going to do over any short-term period of time. Now, longer term, 5 years, 7 years, 10 years, I mean, you can look at the statistics. There's not over 90% of the time over a 10-year period, the stock market is up and it's outperformed fixed income. Over a 20-year period, it's 100% of the time. So that's where I'm a big proponent of setting aside the money you need to live on, and then finding good companies. And again, we're talking long-term now. This is taking off the trading hat, putting on the investing hat.
Yeah.
Find great companies that you want to own for the next 5, 10, 15, 20 years. Like you talk about all the time, Dennis, whether it's a Tesla or any other stock. Have a thesis and let that thesis play out. And if you have that money set aside, that stops you from that fear or that worry of, oh my gosh, the market's down 10%, I got to get out. It's like, no, I've got money set aside for the next 2 years, 3 years, 5 years to weather this storm. I trust the process, and I'm going to let these great stocks do what they're going to do.
All right, we've been on the line with Jim Tassoni. He's the CEO of Armor Well Strategies. Talking long, talking shorts, talking fundamentals, talking technicals. Jim, thanks for joining us here on this extended interview. Great input as always, and we'll be dialing you up again real soon. Thanks, Jim.
Sounds good. Happy holidays, guys.
Thanks, Jim.
Yeah. All right, Triple D. Boy, we are sure talking fundamentals today.
It's important to talk fundamentals, and it's important to give a long-term perspective, because when people see, the whoosh happen, the panic sets in, my stocks are down, oh my gosh, what do I do now? I mean, if you are a long-term investor, and we say this all the time, if you're a long-term investor, buy good companies at reasonable valuations. That's what you got to do. If you're a long-term investor. If you're a short-term trader, you're trading these things. Unfortunately, I don't have the luxury. I make all my living from short-term trading. It's my day job. So I got to be calling these little market moves, and I've got to be, taking advantage of this increased volatility. And I've got to be jumping in and out and getting into things and out of things and all over the place and making market calls. But if you're a long-term investor, good companies at reasonable valuations usually doesn't make it. It usually works out.
All right. During my intro, I talked about reporting after the bell yesterday.
Yes.
Micron and Lennar. And then I talked about reporting this morning, right?
Helps.
Started restaurants. Holy mackerel, Dennis.
Yeah, helps.
You must be chowing at Olive Garden, Longhorn Steakhouse, or their other fine dining establishment. They beat by a penny, but what they like is this fiscal year 2025 outlook. 940 to 960. That's above the consensus at 945. Same store restaurant sales increase at 2.4%. Darden trading at the highs of the pre-market session.
I mean, it's all about when you report. And, all of a sudden this morning, we've got a good market here. So everybody's excited. So if you just go through all the reports from this morning, leave Lamb Weston aside, Cintas is down actually now. It was up earlier, but Accenture is having a pretty darn good morning. They don't care too much about staples. They have CHE, but Paychex is taking off, PAYX. Fuel Cell's up a little bit there. I think it reported there too, just looking through my list. I don't know. Are you chasing something up 14 points like a Darden restaurant up 9%? I'd say sold to you. I mean, yes, Darden's been a fantastic stock here for a long time. Yes, maybe they spun off Red Lobster at the perfect time to get rid of it because obviously Red Lobster has its own problems. But is this the kind of sexy story that I want to get for 2025 and I'm going to pay up 14 points to get it? Nope. I say sold to you.
Yeah, I would say, man, if you got caught in this thing and your target was anything over, 170, you're trading up 1452. I mean, you are right back here, upper right chart here, and I just want to illustrate this because you have all this from all these days it took to go down. We usually say things go down faster than they go up. You're right back here. You're right back here at 175 within your $5. If you don't want to sell it at this area, maybe, think about a stop or something to protect because this is a gift. All the people that were stuck yesterday, I'm telling you, anyone that bought the dip yesterday, it's like, oh, you know what?
Looking on there today.
They're like, boom. They're like, oh, give me 174. I'll sell this at 173. And they're just licking their chops waiting for the open there. So we're a little bit in agreement here on Darden Restaurants. Accenture, let's stay with the good. Up nearly $18, but this is what I think the Darden chart might look like. You got all the way to 372, and then you pull back to 364. Dennis, I can pull up the numbers, or do we really care?
We even care about these earnings reports. I mean, it's about overall market sentiment. And again, sometimes micros drive the bus and sometimes macros drive the bus. And right now, macros completely driving the bus. People coming in, scooping up the dip last night. Now you get institutional money managers starting to get to the desk and saying, hey, look, I need to lighten up here. So I'm going to lighten up in this rally. This is what's happened. This morning, you had a huge sell-off, people panic in the streets, and then you get overnight, they're like, oh, look at the deals, people getting from their day jobs to their Robinhood accounts and saying, oh, I want to scoop up some of this stock and this stock and this stock, and oh, look at the deals here, I never thought I could get stocks this cheap, and, just the random buy, just everybody with the buy the dip mentality. And then, you have what's happened is, institutional money managers don't start getting to their desk till 8:30, 9 o'clock, so they start coming in here right now saying, hey, it's a pretty good snapback rally here. Yeah. History shows snapback rallies sometimes fade, and we're starting to fade here already a little bit. So I think Joel's maybe right with the call. The high of the day may be in. I don't know if we're going to give it all back. It's hard to say. What I will say again, it's a very important day for the market. It's very important that these gains hold. It's very important that we don't all of a sudden go red again because we've been red in 10 days in a row in the Dow. We need a bounce back day. We need something here to say that, this isn't something bigger. So again, when you sit back and you do overall market perspective, look at Warren Buffett sitting with a pile of cash. I'm still sitting with a pile of cash too because the stocks just aren't that cheap. Yes, I have some stocks that have done really well, on stocks like Tesla and stuff, but there are just a pile of stocks that just, aren't doing that well right now. And and overall, the market is not cheap. I mean, we are historically stretched, to talk about what Jim just said. It's been an incredible 2-3 year bull run here. I mean, so you've got to give a perspective and say, good companies, reasonable valuations. There's some out there, but there's a lot of companies that aren't. You can go to the value investing and say, I want to position myself there, but it's just been such a disaster. We were talking about this yesterday, Joel. I think that's more of a calendar turn thing. I think value could come back into January. I don't want to be too early on that trade. And yesterday, you're losing 1,000 Dow points. There's nothing to make me get all excited about, buying unless you think it's capitulation. So all depends on your time frame. There is some deals out there, but a lot of I think the market just needs a cooling period, and I think Powell's giving it to it.
Wow. A company, this might be the first time ever we talk about Lamb Weston Holdings Incorporated. What a major run here since August, getting knocked off its keister here, down 14.5 bucks. I'm looking at the guidance cut here, Dennis. How do you go from 415 to 435 to 305 to 320?
It's a big
Up,
cut. When you
that's
cut guidance by a third, they're going to cut your stock down significantly as well. And obviously, that. And again, frozen French fries and stuff, it's all cool. I mean, when you're in a recession, sometimes Lamb Weston is actually a stock that does better when the markets get tougher here. Do you got some value? Do you got a dividend? Do you got some support down in the 60s? Maybe. Is this that sexy story that's going to drive in 2025? Frozen French fries. What are you investing? What's your favorite stock? Frozen French fries. That's my favorite stock. That's one of my 2025. Frozen French fries. I mean, the story is just not here. It's non-existent.
Oh man, yeah. I mean, people are getting hell. I mean, they're probably not even hungry for them, right? Because they're taking their Ozempic, and you know what? Ooh,
Ah,
Lily, that doesn't look too good here. We do have some VRTX here. I know
yeah,
it's a
bad
high
news here.
price stock, but let me try it here. Vertec Pharma's Suzy Suzy Tragene, Suzy.
Sustragine, we can go with that.
Okay. Meets phase two primary endpoint in radiolipathy. I'm not going to do this anymore. But they must not have, there must have been something there they haven't liked here after
Yeah.
just getting killed yesterday under 400 bucks. You are under the bottom of the page here, man. Pharma, Dennis, biotech, not looking good.
Well, I mean, some pockets of pharma have looked good, but pharma is really weakening, and interest rates are an issue here as well. But I mean, they just didn't like the data. Bottom line is, pharma moves on data. The data here, even though they may have met their primary endpoints, when you really dig down into it, everybody, even talking Adam Fierstein, looking at him, he's tweeting about it as well. It doesn't look great. It doesn't look great, the data here for this drug. So, I mean, we were down ahead of it yesterday. Obviously, it was selling off with the overall market, but now you get that huge whoosh. It's hard, man. When they report bad data, it's tough. Like, it's tough to just say it's just going to snap back and bounce from here. Again, I don't follow the story closely here. Is there support in the 390 area where it's trying to find support? Yeah, you had some lows there back in April. But, when you get data, it's like the story, goes ice cold for a while when you get data that actually misses. So I think I just stay away.
379 is your pre-market low. That's down another 20 bucks from here. It traded so far through it, but I'm still eyeballing this 392 area. The only reason is there were two monthly lows and it's only a technical level. But if you wanted to buy this thing in the lower 390 handle, you had your chance in the pre-market. Let's see what comes down today. Just also think about the fact that it traded as high as 471 yesterday. So when it's down 100 points from that level in the pre-market trading, looks like you're finding a little bit of support. But I'd like to double bottom on the monthly charts. Dennis, we're leaking. What are you doing over there? Did we get some imbalances, or it's just people just saying, you know what? This is a dead cat bounce, and we've turned on the threat of interest rates. Oh, what now? They're only calling for 2 cuts instead of 4. Wasn't it 6? Like
I
where
don't know.
like who makes these things up?
Canada's cut 50 basis points every freaking meeting, and the Fed just sits here and doesn't cut at all. So you want to know why the U.S. dollar is strong as the Canadian dollar? It's all just rates. Nothing to do. People say, oh, it's Trudeau, the Canadian dollar weakness, all this stuff. Not Trudeau, it's rates. They're cutting rates. You get carry trades going across. I can see the same thing. You get way more money in the U.S. right now for your dollars here. So you could let's go on even in the carry trade in the U.S. But man, I mean, this market's going to be tough to call today. It's going to be wild. It's going to be, I would say, if you get a sell-off, and this is all just scenario analysis, if we get a sell-off, you're probably going to find buyers near yesterday's low. You're probably going to find, buyers down that 584 to 585 if we sell off.
Oh.
And if we rally, this sky's the limit kind of, because we sold off so much, so it's all air above here. So, I mean, it's a little bit tricky. Actually, I kind of want to sell off. And, maybe you try, near yesterday's lows for some bounces here, because the short setup is tough here because you went down so much. It's like, well, where are you leaning? if you're going short stocks here, where are you leaning? You're just, you can maybe lean on the high of the day right now and say we give it back. But there's a lot of strength across the board here right now, just looking under the hood. You've got obviously, Meta, very strong, up 9 points here. Tesla's having a nice bounce back day here. You got the banks are all strong. You got the IWM strong. You got oil taking off. It's strong too. We have strength across the board here. So when I see S&Ps up only 4 points, 0.69%, I see a lot of stocks up more than that. Staples are going to be a pocket of weakness here, obviously, which, is interesting because they actually were going down yesterday, and they're going to go down here again today just because the market's bouncing here. But rates, Staples are linked to TLT. TLT goes down. TLT is down another buck. So, you have to look at the lie detector test that we talk about here as well. With TLT being weak, it's hard to go buy the IWM with TLT. It's hard. Right now, IWM trading up $176.8%, stronger than the overall market. TLT down a buck. I'm like, that's not where I want to buy right now. I don't want to come in and buy the IWM and actually be a seller of that strength in the IWM. Be more interested in buying some tech names, some other stuff, but stay away from the interest rate sensitive stuff because the TLT is down another $1 here today, Joel.
I know. I just noticed that. And I noticed the IWM. What a double top here. You got up to that November 21 high at 244.46, and you got to 244.98. Leaking again. Another move here on the downside. I just want to say the only easy call, is if you bought the dip late in the day yesterday, or you bought the dip early this morning. Now you're saying, hey, my trade's over, my day's over. I sold because now we are good. We are distancing ourselves further and further from that pre-market high. So before, when I said I think it's in, I don't want to say no because you never know. I don't know. It's going to be hard to find support here. Because the close is way down at 40
middle
and
of nowhere.
Yeah.
Sometimes, to Jim's point, sit back and relax because we're in the middle of nowhere here. Again, I'd be more inclined right now when I look at the stocks and I look at where the SPY is. I think the S&Ps, unless the stocks really start rolling over here, I think the S&Ps, are not going down much lower than they are right now. So I'm actually a little bit of a buyer of SPY right now. But again, if stocks continue to leak, then that all changes here too. But just, looking under the hood here, there's a lot of stocks that are showing a lot more strength than 0.65% here today.
All right, tomorrow's Quad Witch. So who do you think the guest is going to be on tomorrow's show? You only get one guess.
I don't even have any idea.
Options.
Options. Oh, yeah. CC Legator, obviously.
Yeah.
CC coming on. Yep. It's been a while since we had CC. Options expiration. He's our option specialist. CC Legator rocks.
Yep. Don't be a hater. Come back tomorrow. Listen to CC Legator. Joel Elconin.
He's back. The Joel Elconin rally here intact. Thank you, Joel, for coming back and saving the market.
Yeah, we did. And did you tell them all about our little boat excursion at all? And
no, I didn't talk much. I just talked about my pneumonia and almost death experience.
Okay, all right. We will.
Yeah, we down in Naples. Our friend Rob took us out in the ocean, which was a little bit interesting there. It's already going in the ocean with 4-foot wave rollers going near. Saw the most expensive house in the USA down in Naples. Just unbelievable money down there. This house is $20 million. This house is $40 million. This house is $295 million. I'm like, holy man. I know. I was thinking down in that Naples market, how do I short these houses? Because this $295 million house sitting right on the ocean. I'm like, what happens when the next hurricane actually hits that house? Is it still worth $295 million? I'm like, I don't know, man. Again, Naples is awesome, beautiful area, but so expensive. Just everything down there. It's like, it's got to be one of the most expensive cities in North America.
It is in the world. Yeah.
The housing prices are just insane. Like, we're talking like 1,200 square foot homes, $2 million. It is, or more than that, $3 million, depending on where. If you're close to the water, it'd be $7, $8, $10 million. It's the housing prices in there, crazy.
We missed Fari. We forgot to look up Fari. We're sorry, Fari, if we're.
Yeah, we should have looked up Fari. We were only there really quick in and out.
Yep. Okay, is Christian back tomorrow?
Yes, he is.
Okay. All right, so we'll be
traveling day. Travel day for Christian.
Okay. All right, folks. Thanks for joining us on Pre-Market Prep.
One cough for the road.